we've got 40 seconds to go here. I'm just going to switch over to the all markets view here so we can watch the overall reaction to this producer price index number. What's your profit in dollars? About $30,000. Granted, I've had a rough year so far and I'm about break even, so context is important. Coming in, breaking news. Okay, PPI comes out in just a second. Let's see if it gives us any movement today. Core PPI came in soft, which is good. If it's anything like yesterday's CPI, which barely moved markets, we wouldn't expect too much. But look at this. There we go. Guys, we got a cool print of inflation data this month. And it's largely been ignored because of all the volatility and tariffs, but not by me, not by this stream. We pay attention to the economic data, and cooling inflation is good news. That is good news because the Fed can use that as ammunition to potentially cut interest rates sooner rather than later. What does that lean me towards? Supports the bullish narrative for gold, supports the bullish narrative for stocks, right? Because if the Fed can cut rates, they can help with all the uncertainty that's going on with tariffs. And if things start to materially weaken, they can cut interest rates to combat that slowdown. To me, cooling inflation is great news, and we should be pretty content to see both PPI and CPI this week coming in cooler than expected. Yesterday, we had 2.4% CPI year over year. That's not that far off from 2%. That's the second consecutive month that we've had lower than expected by analyst inflation data. Great news. Like, the news cycle is so fixated on tariffs and Trump and President Xi, and there's like this like bombardment of negativity and scare tactic news out there. But inflation data cooling off is a good thing. I'll celebrate that all day long. That's great. Appreciate you, Nick. Never stop preaching. Thank you. I appreciate your support, and everybody who's tuned in here with me live. I'm wishing you the best in your trading this year, and I also want to wish you guys a happy weekend up next. Hope you guys have some nice plans. It's been beautiful where I live. I live in Atlanta, Georgia, and beautiful out. And I'm going to do some yard work this weekend, which I love doing yard work. I don't know why. I don't know what's wrong with me. I always have. I like cutting the grass. I'm excited for it. I'm actually waiting from a cut from a cut at May, Nick. Probably going up on the cut side. Fed Watch tool. Good point, Boulette. Yeah, I mean, that's the thing, right? We have seen some choppiness in the bond market, which I think actually was part of the reason that it got the Trump administration's attention. You had some pretty sharp moves lower right before that announcement, right? The change in, okay, we'll get that 90-day pause. Many people credited the bond vigilantes, if you will, the bond market, signaling, okay, if we go on this pace, we're gonna really increase the probabilities of recession. Nothing wrong with loving yard work. Totally fair. I actually love it because what I do, Panado knows my story. I appreciate that. I am a landscaper at heart. That's my humble beginnings. I built a lawn care business in my young years, and it funded my trading accounts in the opening days. Anyways, what I do during it is I usually plug in my headphones and listen to podcasts. I have been trying to become a better YouTuber this year. So I've been listening to a lot of like YouTube, like how-tos, like how to improve, how to help people more in your videos. Really, that's the core of YouTube, is trying to find ways to help people more so they want to keep coming back. And I hope that you guys on the channel feel like that's what I've found. You know what the secret to YouTube is? Well, really the secret to business in my experience so far, just help people, just like genuinely help people. And somehow that magically works because people want to come back and they want to. So, I don't sell any courses. every piece of educational material that I do. Like I'd say 99% of the educational stuff that I've done and sharing my own experiences is all available for free on YouTube. And that's part of the model for like how we do business. Like obviously the Edge Finder, this is a thing we sell. Like I'm never going to lie to you. This is a sales tactic through and through. It's a great piece of software and I think everybody should own a copy. But like YouTube, free content, free courses, free everything to try and just offer genuine help to traders because I have a lot of experience in this, more so a lot of painful lessons that I've learned over the years. And that's my strategy with YouTube this year is just find more ways to help traders as much as I possibly can. Not because I'm being a charity or a saint, it's a business strategy to help people. Any new trades? Yeah, I mean, so I have a couple things to do, but I have a lot of stuff that I'm just managing. Actually, I need to take profits. We're going to take profits right now on NZD USD. We launched the Edge Finder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm showing traders the most convicted top ideas that the Edge Finder is producing now. The Edge Finder has helped traders go from beginner to pro in terms of the fundamentals and has helped many traders go from unprofitable to finding the missing pieces in the name Edge Finder. So if you're not already using the Edge Finder, let me tell you about the biggest discount that we offer all year long starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the Edge Finder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the Edge Finder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the Edge Finder at the super discounted prices. Thanks for watching. And now back to the show. Let's go take a look in terms of top setups just for currency pairs for a second. Let's see what we've got here. So CAD Swiss, I still like the trade. Like even though it's working against me right now, I still like the trade. What about Kiwi dollar in terms of re-entering that idea? Well, this is what I'd be looking for. So Kiwi dollar, especially with weak PPI, right? So that should be a dollar negative thing within the Edge Finder scoring system, right? If we do get a reversal back down to key demand areas like we saw here, that's why I took the trade previously, I may look to re-enter a Kiwi dollar long. I'd also be interested if we get like a big up cycle here and then a pullback into this area, I may look to trade Kiwi dollar long again there. FX has been splendid lately. Alan, yeah, I've been very thankful for FX and gold trading this year. I can tell you that, Alan, because my goodness, man, I have gotten hit just like everybody else with stocks. But, you know, I think that long term, you're getting some really good opportunities in the stock market. So I'm just going to slowly accumulate shares. Those are not like short-term trades. Short-term trading wise, been playing gold, which is going phenomenal. I've been playing Euro dollar, Kiwi dollar, CAD Swiss. Those are my 4 active trading positions. Oh, and I sold a put yesterday. This is an options trade. I sold an out of the money put on the Russell 2000. So if anybody cares about options, I sold the 160 puts out to June. I collected $5.80, I think, or $5.85 in premium. And I did like 7 contracts. So I think it's a max profit of like $4,500. So if the market trades sideways, up, slightly down, all of those scenarios, I just make $4,500. If the market tanks through these lows, I just have to buy I have to buy IWM at $160 per share, which I'm happy to do. So this is what you call a cash secured put. So I shorted puts. I didn't buy puts, right? I didn't bet the market's going to go down. I actually bet that the market was going to go sideways or up. And if it goes down, I basically just have a contractual obligation to buy the shares. That's the way options work. If you're on the sell side, which is predominantly where I stay. Right now, with a VIX where it's at, I am absolutely more on the sell side. This is, in my opinion, and not financial advice, not a time to buy options. It is not a time to buy puts. It's not a time to pay extremely high premiums, right? We talk about this so frequently. Options trading is a part of what I do. I trade a little bit of everything. You guys hear me talking from FX to gold to stocks to options. I do a little bit of everything. Right now, in my personal opinion and my approach to the markets, this is a time where I sell puts for premium. And that's about it for options, right? For trading wise, the IWM, I wouldn't mind owning some of that in my portfolio. It's a diversified ETF that I think is incredibly oversold and I think has some rebound coming for it. That being said, if it keeps going lower, I'm happy to step in and buy the shares, which IWM is small cap companies in the United States, a diversified basket of small companies in the United States. 12% down from here. If we continue to sell off, that would be a discount peak to trough of 34% off on small caps. For the long term, I'm happy to own the shares. So if it happens, great. I almost want to get assigned on this position. So anyways, am I still in the gold trade? I certainly am. I'm trailing this one. I talked about this earlier. I just marked in this level of support around 31.30. So what I'm looking for on my gold trade, I'm just going to watch to see if we're trading like this within like the next 2 hours or so. I'm just going to go ahead and pull my stop loss higher. I have a really busy day in the office today I got to get to. The content side and software side, I just have a lot of work piled up. So trading wise, I think I'm going to take my eyes off the screen in the next like 2 hours or so. And in the meantime, just basically move my stop loss, lock in something else there on the trade. But trade's going very, very well for gold, and plan is to continue to hold that one. Again, trailing this stop loss just because I don't know how far this is going to go, right? Gold could just go like, you know, it would shock the world, but would also be possible. Gold could go straight to 4,000. Like, I know this would, unfortunately, for a lot of traders out there who are like leveraged short and praying for a move lower, like this could happen. I don't know that people register that that's possible. Like, you could have, it is not out of the question that gold could have in the next 1 year, gold could go to 4,000. I don't try to call tops on gold for this very reason. You know why? Because people thought, let me tell you what I thought was going to happen in 2024. You ready? I'll never forget this because it just goes to show how hard this stuff is to predict. As we went into 2024, I had a target that I thought was pretty aggressive on gold for 2280. Okay. My target for the year on gold was 2280. And that to me sounded aggressive at the time. And in fact, many people were like, no way, gold is not going to like rip that, rip up there. It's already overbought. That's what people were saying. It's already at the highs. What are you talking about? It's all at all-time highs and you think it's going to go up from here. I was right that it was going to go up. Absolutely dead wrong on how far it went, right? So you have to understand, gold can shock. I said 2280, right? I thought, 2280. I think that's a possibility for gold to do. You know what it ended up doing? It went to like, at one point it went up to 2,800. I was off by a margin of what? $550 an ounce in 1 year. It went up massively in 1 year. So for those who think like gold has to reverse, it's way too overextended. Like I said, that game is dangerous. Calling tops on a trend is just hope. It really, there's so many bullish catalysts out there for gold, and that doesn't mean that it has to keep going higher. But But I just think that when you think you know when it's going to turn, gold has a wonderful ability to just say, nope, gotcha. Are you still in long position? I am. Yep. I went long at the 61.8% retracement on the daily chart, key support level, and had a very nice reading on the Edge Finder's top setups reading. Went long gold and still long currently. Stop loss has been trailed into profit, and my plan is to trail stops here. I mentioned I'm probably going to update the stop loss inside of the Discord right after stream. Probably going to move it around 3,100, but I'd like to just take a look at it when I'm making that call. In fact, 2 days ago, we saw the second biggest all-time upward move on the NASDAQ in a single day. It was absolutely insanity. We saw, again, from those lows of the day, lows of the session to the highs, we saw a almost 16% move, which is absolutely insane. I'm wondering what your thoughts are with the indices right now. We've had some good inflation data this week, but there, of course, was also the 90-day pause from Trump, and there's on retaliatory tariffs, and still some escalations between the U.S. and China still ongoing. So, what are your thoughts on all this?
Yeah, at the moment, I think it's a bit difficult to just to point out, especially with the tariffs, because at the moment it seems like we are still going to have these tariffs for quite long, and it shows us that the market doesn't really like the tariffs, and it's obvious. But at least they did pause. But the problem is we still have this trade war with China, so which means I'm just going soft on this. I did show that nice move. I think it was 12% before that, before the market closed. We did jump on that because we had the good news that they will pause for another, I think it's 3 months and something like that. So, but now it seems like this tit for tat with China, it's just delaying the market. So the best thing is to stay up to date. I think if maybe they can actually find a solution between China and US, I'm 100% that the market will still continue going higher. But for now, I think we are just here for consolidation. The market will just move around the same level.
It's been a hectic couple weeks. You know, every time it seems like we're finding some bullish ideas, we get slapped back down with some big bearish, moves. I'm curious from a price action standpoint. It sounds like you're more leaning towards potential buys, but what would you need to see in order to take a buy or sell position? Like, what's the what would you need to see price action wise and or fundamentally?
Come again. I think the network is not really very good on your side.
Oh, sorry about that. Yeah, no. So I basically just said, in terms of a price action standpoint, what would you be looking for in order to find buys or sells? Like, would you be looking for a breakout? Would you be looking for a specific fundamental catalyst from China? What are you thinking?
Yes, I think on the moment it's no longer about the market structure. It's actually on the fundamental side. If maybe they reach a certain deal, that will be good for me to go in, because at the moment I don't really think that the market will keep respecting whatever levels that we have. If the good news are going to be out there, I think the market can break anything. But at the moment, we can see that things are not really as nice as we think. So we still have that pressure. So at the moment, I can say I will stay out of indices for now. I will just focus on other things.
Sure. Yeah, no, it's waiting for some clarity, waiting for some more clear trends to form. I think that's a perfectly reasonable thing to think, especially from a trading perspective. What are you watching more so? Are you watching gold, Forex pairs, Bitcoin? What's most interesting to you right now?
Yes, I was actually on gold, which was moving very nice. GBP USD, and the other ones, they were moving also very nice. So Euro USD also there. So they were just obvious. They were obvious. So I was focusing on them most of the time. But gold, it was just straightforward. So I was mostly on gold.
So do you think when you look at the dollar move here, right? Because you just discussed a lot of dollar rivals, if you will. You have this big fall off in the dollar. Do you think that that is overdone? Like, do you think there's a bounce back coming for the dollar index, or based on all those concepts, right? Euro, pound, gold. Do you think there is more room for the dollar to continue lower? I mean, Kenzo, we actually just broke below 100 on the dollar index. Is this signaling that you have much more room to fall for the dollar index?
Yes, I think even if maybe it doesn't really go crazy as that, but I think it's that time where we are going to see the market going lower. I heard somewhere, I think it's CNBC, they said instead, because if you still remember with the FOMC, they were expecting actually 2 rate cuts. This time it's like they are expecting 4. And from there, we started to see the market continuing with this weakness. So that is actually good because now the market is pricing itself for lower rates. And now we also see some of the events not really aggressive. So that is good for rate cuts. And Trump is also pushing for that, which means they might say we're not going to cut because of political pressure and stuff like that. But at the end of the day, I think they are going to actually cut those rates so that they can boost the economy.
Well, I think it got a little bit easier today, right? With the PPI and CPI this week coming in lower than expected. That gives the Fed a little bit more room to work, right? Because now they have less worries of inflation. There's still, of course, the inflation risk, and I wouldn't say that we've beaten inflation per se, but it's looking a whole lot better than we were up in the high 3s or 4s or 5s, right? We're down now officially on the lower end of 2s. 2.4% CPI gives the Fed much less stress, I guess, on inflation, and now can stay, really focused on unemployment. So if unemployment rates come down, go up, like if we get unemployment rising, the Fed has more potential to actually cut the interest rates. So it's almost like you're getting that Fed put, and at the same time, Trump seems pretty adamant that he wants yields to continue to come down. He wants rates to come down, and he also wants the stock market to clearly not crash either.
Yes, you're right on that. So at the moment, it seems like things are heading on the right direction, even though the tariffs seems to be going to maybe, let's say, they might have an effect on stagflation, which is something that we don't really want. But besides that, I think we were heading on the right direction. Events were now going lower and lower, which means that gives FOMC or Fed the chance to cut those rates. But we will see, because if they cut also, it might not really look for other economies, but it's something that we think they have to go there, especially they don't actually have any choice. They don't really, I mean, they have to act, as they also have the pressure from the political side. I think things are going to actually go well from now. Let's hope that China and US get this thing done. I saw China, they said they're not going to increase anymore, or they're not going to play this game of Trump increasing those tariffs. That maybe might force them to go to the table, and that I think is going to be a very good deal. And I think we're going to see a very nice move.
Yeah, no, I think to be honest, I actually feel much more confident about the situation for things like indices and things like the state of the economy. I know people are still very scared out there. We've talked about this many times on the channel. The put to call ratio is still very high, showing there is extreme levels of fear still in this market, uncertainty about how tariffs could impact the economy, which is true and fair. Like there's fair concerns there, but what I find some comfort in is the idea that, number one, the Fed is now a little bit more positioned to cut interest rates after today and yesterday. And you also got a response clearly from Trump based on what was happening in yields. I mean, take a look at the 2-year yield was dropping dramatically. And as that was happening, that is right when we got the 90-day pause. So you got this bounce back. Clearly, the bond vigilantes got the attention of Trump and team. I mean, specifically, I think he actually even mentioned that he had watched something from Jamie Dimon, the CEO of J.P. Morgan, and at the same time, you had Bill Ackman, a supporter of Trump, go on Twitter. I'm not sure if you saw this, but basically, pointing out that these sweeping tariffs could be too aggressive and could send us into a recession. So it seems like the Trump administration's willingness to listen to that was perceived as a positive thing. And clearly, some key voices in the economy are able to actually get the attention of Trump and team.
Yeah, I saw that. I think it was Germany. They thinking about selling taking back their gold from US, and other countries they're trying to sell their bonds, US bonds. And at the moment, I saw they were mentioning Japan and also Swiss franc. I think Switzerland also as a safe haven country. It seems like they are going to buy their treasury bonds from that side. That made the Japanese yen to go aggressively positive. So, but I don't know if maybe that will actually become fruitful. And yeah, I think at the moment, those are the challenges that US can face, because it seems like US, according to other countries, it's no longer as stable or as safe as before, because it seems like things can just change now and then. So I think they want to diversify their bonds. So because countries, they do that, even China, I think they threatened to sell some of their bonds, US bonds. So that is something else, and it's billions of dollars, obviously. And the safer countries to do that, it's mostly Japan, CHF, and the other ones, or maybe even gold, to buy extra gold and stuff like that. But yeah, I think maybe it's because of that. And it's been moving very nice. If you check GBP, JPY, and the other ones, they were like seriously selling. So it was very nice.
It's very that is kind of answering that question for Alan and for everybody else who's like, what's going on here? I think that there's this weird dynamic that is quite rare, which is sell the dollar, sell US treasuries, and diversify to other safe havens, right? I think that's kind of what we're seeing happening. You're seeing the Japanese yen up. To your point, the Swiss franc up. You're seeing gold up. So perhaps many of these reserves are moving money around, and perhaps there's like this downgrade on interest in U.S. treasuries, U.S. Investments, because of course we don't know what's going to happen to the economy. We don't know, there's just many uncertainties about what's happening in the United States. So perhaps that is why there's a little bit of like a bond repricing going on, where you're seeing yields jump. And I think many fundamentalists, Kenzo, often refer to the bond market as like the most important market, because it gives you an idea of the economy, inflation, risk appetite. It all is kind of baked in the 10-year. It's a very, very powerful chart. And amazingly, whenever I talk about the 10-year yield, I've noticed this in my video retention. I don't know if you ever look at your YouTube retention. It's actually not a popular topic. People do not really care when I talk about the 10-year yield. People always want to talk about gold. They always want to talk about the NASDAQ. And I get it. Those are exciting things. But this chart right here is very important.
Exactly. Yes, I think mostly when we go on trading, whether it's in indices or Forex, we sometimes forget about bonds or treasury yields and stuff like that. But they actually help us to understand the state of that economy. And most likely, when we talk about bonds, the most important one, they are the US one. Even though we don't really follow CHF or JPY bonds, because they are, I think, maybe second, third, even if they're not really that crazy big. But US bonds, they are quite important. When they go up, when they go down, they mean something. If you mix that with VIX or volatility, you start to get the idea why there is a panic, why people are buying bonds or why they are selling, why the bonds are going up. What does that mean actually for that economy? When it's selling, what it's actually happening, you see. So I think it's something that people they have to understand, but it's not a most popular thing. I never heard many people talk about bonds. I also don't really talk about them most of the time because it's not really a popular topic. So yeah, I think it's something very important. So Swiss franc, it's crazy. You can see that it's been selling for a while now.
Yeah. Yeah, no, I mean, look at that chart. I mean, that's a crazy, crazy move. And Ball Out in the chat says same thing. Violent moves are insane. Guys, this is, for everyone in the audience, this is some pretty wild times. Really, if you have not been trading for that many years, I will say this feels very similar to what trading the COVID pandemic felt like. There were many charts that were moving in straight lines. If you were an options trader in this time or that time, it was very difficult because premiums went out the wazoo. People went crazy with volatility. Currency markets made much more large moves than what people were used to. The indices crashed way faster than people thought were possible. These types of environments, the issue is that it's such a shock to the way markets have been moving that it catches many people off guard. So I do want to just say to everybody who is listening, who may be challenged this year, you are not alone. In fact, I think the vast majority of traders are having a harder time in this year because if you've built a system around the way markets have been behaving the last few years, this is a shock to the system, right? It's a very different type of environment. Belen says, I bought an adjustable desk to relieve neck and back pain. I actually have one. I could raise this desk and stand if I wanted to, but yeah, I don't know. Kenzo, how do you, in an environment like this, where clearly the dynamic has changed, we see these massive moves, what do you do? Do you reduce position size? Do you look at things differently? Do you trade any differently? Do you stay out of the market more? How do you approach this type of environment?
I actually enjoy trading during this time. Maybe it's because I understand few things, especially CHF like that. I know, for those who know, obviously you know this, mostly CHF moves the same as gold. When gold goes up, mostly CHF will be going down most of the time. If there is panic, let's say maybe like now there's tensions and stuff like that, most likely CHF, they still actually before US, or let's say before other things, Swiss franc is actually a neutral currency. So you can actually, maybe now things start to change, but it seems like before, like for more than 100 years, it's been actually a safe haven currency. Then gold also quite the same. So when gold is going up like that, if maybe I feel like prices of gold or maybe it's a bit aggressive, I can just sell Swiss franc or USD. Yeah, you can see still flying. So mostly you just do that. When there is war and stuff like that, Russia, Ukraine, if you check, most likely Swiss franc was still aggressive. But the reason behind that is to understand fundamental stuff. What's really happening during this time? Which pairs can you trade safely? And it doesn't really get that crazy volatile. It moves very nice, even though sometimes it might move in the same direction. But by understanding the overall movements of those markets, it's way much better than just focusing on one pair. At the moment, if you're forced to trade on indices, S&P 500, most likely you're not going to make it very nice, you see. So that's why you have to have this understanding of just understand what is the safest pairs to trade during these tensions, which ones are not really likely to perform very well if other economies are performing very well. Like if maybe there is no war, there is no tensions, Swiss franc doesn't really perform very well. Even gold, it doesn't really perform very well. So now it's easier for us.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.